If up until now, every time you've entered the market, the candle has reversed and you've gotten burned, there's only one reason for it. You didn't enter at the right point. Hello, I'm Farhad Vatan, a financial market analyst. And today, in this video, we're going to learn a pattern that shows you the exact starting point of a price explosion. The point where the big money fuels the market, and if you're in on it, you'll ride the main wave. So get ready. Today is the starting point for your professional trades. Watch this video to the end right now and once and for all, eliminate incorrect entries. As you can see on the chart, we are currently observing an uptrend in gold. If you look closely at the chart, you will notice that we are working with certain specific candles. In any trend, whether it is bullish or bearish, there are always these single candles that have a noticeably smaller body compared to the candles that come immediately before and after them. These particular candles can often indicate a brief pause or a moment of indecision in the market. Take a look at the chart again. Right now, at this very moment, we are in an uptrend, which means the overall direction of the market is moving upward. Here, we see a candle that has a smaller body compared to the candles before and after it. We call this candle a base. You see, I'm not talking about the price ranges that some people call a base. I'm not concerned with those. I'm only working with single base candles here. Now, when you are in an uptrend and you see a candle, actually, to be more specific, in an uptrend, you notice a single red candle with a body that is noticeably smaller than the bodies of the candles immediately before and after it. That can often be the turning point for the next upward move. What does that mean? Look, when you see this candle, you can mark out its range. When identifying the candle, only the body is important. The wicks are not important to us. The body is smaller than the bodies of the candles before and after it. When the market makes a correction during its upward move, our base point can be a reversal, or to put it better, the start of a trend continuation. It can be its starting point. Notice, the trend was bullish, it returned to the base area and then continued its upward movement. Or, for instance, look here. We have a single base candle where the bodies of the candles before and after it are larger. The market dropped and then made a move from the base area. Keep in mind, folks, our time frame is daily. This means the return from the bottom of the base to this peak is around 70 pips. Let's look at the next examples as well. You see, in an uptrend, we have a single base candle, and the market made its move after reaching the base area. See that? Base, the base's movement. If you can very clearly identify these candles, you can enter very confident positions. Look, what we have here is an uptrend that is accompanied by a red base candle. After the price reached the significant area and then pulled back, it continued its upward movement. After the price corrected and moved down to the base area, it made another strong pumping move upward. This sequence shows how the price action respects the base area before making another significant move higher. So you see how important the base is. Look, a base candle, which is the initial candle in this context, the range of the base candle, and after the drop, the market pumps. You see, this daily candle is in general approximately, or roughly speaking, 70 pips. Do you see? The market made its move, strongly influenced by this particular candle. Or look here, we have a relatively weak base candle within an uptrend, and the price then made its upward move. Then again we have a base. After the breakout, the market pulls back to this area and makes its drop. Now, let's take a look at Bitcoin as well. In fact, this is the Bitcoin currency, as you can see. Currently, we are focusing on Bitcoin. Look. In a downtrend, we have a single bullish candle, which can be a base area for us. After the market breaks the base area, there's a pullback and an uptrend. Let me find another example for you. Look, an uptrend, powerful candles, and a base with a very weak candle. After reaching the area, it had an upward move. Then, after the breakout, a pullback and a drop. See how important that is? I mean, the range it defines is very important. Look, a downtrend, a green base candle. The market, after reaching the base area, made its drop. You can see it has reacted to this area twice. And after the breakout, a pullback and then another rise. Again, a base candle. In an uptrend, a red candle forms. After reaching the base area, there's an upward move, and then after the breakout, a pullback and a drop. You can see how important these base areas that I'm showing you are. So we can definitely use these base areas not only for both our entry points, but also for the take profit levels that we had previously identified in our overall trend. In some cases, we can also use them as the predetermined stop loss level for our trade, helping us to better manage risk. I hope this tutorial is useful for you. By following the things I've shown in this video, you can watch this video again from the beginning, then listen more carefully to what I'm saying. If you follow the points I've mentioned, believe me, you can take positions that will be very profitable for you. In the next video that I'll post on our YouTube channel, I'll cover how to trade with the price action style. Because most traders, after a trend breakout and the subsequent pullback, enter a trade and get stopped out. And the turning point, the important point it has, I will explain this in the next video for price action. I hope the tutorials you see on our YouTube channel have been useful for you. If you like this type of tutorial, be sure to like it. And to see future analyses from the channel, subscribe, so you're always the first person to see the new content. Until the next video, stay profitable and full of energy.